Good afternoon, ladies and gentlemen. Welcome, one and all, to today's session where hopefully we're going to have another banger. Good to see you guys. Hope you're doing well. Can you give me a quick sound check, please? And then I can get going. Yeah, there we go. Awesome. Great stuff. Thanks, Matt. Thanks, Matthew. All right, so. Hey, good afternoon, Ian. Good to see you, mate. So, apologies for taking a minute to get on there. I'm stuck with some transaction. Trying to claim some silly cryptocurrency token. It took a little bit longer than I expected. Damn thing froze on me. But we're all good. So, yesterday proved to be, relatively good. It was a strong day in terms of funds performance, in terms of the moves that we saw in the market. We did have some pretty good breakouts. The markets in the US Open yesterday were not that good. But the trades that we decided to plan for and take were okay. Now, the Dow Jones was not one of those guys. And I actually lost in the Dow Jones yesterday, as per our trading plan yesterday afternoon, which was taking the breakout trade between these two margins in here. And the trade went straight to stop loss almost as soon as it was executed. So that was a bit of a shame. The market breakout yesterday was actually really terrible for the Dow Jones, because this was the 230 candle. Okay, so the breakout really takes place from this candle here. And from that point on, we just ranged. We didn't actually make it anywhere. So we ranged. Really tight little consolidation margin here. This is not the kind of stuff that we really want to be getting our teeth stuck into. And then we ended up going for a little bit of a nice push up into this point in liquidity. But that was between 8 and 9:15, 8 and half past 9 at night. For us here in the UK at least. So, yeah, really underperformed. And, not that impressive. Not much to talk about there. We'll come on to planning for today's breakout, of course, as we always do. But that's just a bit of a review from yesterday's moves. Hey, Braden. So, looking at the NAS 100, then was actually pretty good yesterday. I'm not going to sit here and say that, we managed to get the whole entire thing here. Our trade that were planned from yesterday were between this margin here and here, and the margin between there and there. Yeah, so that was what we were expecting. So a very, very small little chunk. Ended up actually getting both of those as the wins, as per the plan yesterday as well. So both of those ended up playing out exactly as we expected. The nice big sell-off that we had, which was okay. And then on the rally back as well, we had the run down, and then we had the rally back, and the rally back was quite nice. I didn't take anything, though, after that, so I was done and dusted with my loss in a couple of wins in the NAS yesterday, and that was me done. This move that we've had here today, in fact, was really nice in the NAS 100, when we had this nice rejection from the floor here. Beautiful breaker structure in that point there, and then this really nice push. But this chart is just way too busy now. I mean, my God, it gets messy, but this is just in a whole new world. So I'm going to spend the afternoon pretty much simplifying my charts, clearing them all down, and doing some admin, some much needed admin. So that's the NAS. That's where the NAS was. So to recap on the rest of things then, the gold long from yesterday, and that was that one. Really nice. Had a bit of a bounce back from this area up here at the moment, as we can see. Might consider actually taking a bit of a counter trend trade in gold at the moment. Possible short will ensue back down to around, maybe at around 26.50. I'm not entirely sold on it yet, but we will cover that one. Aussie yen was a write-off. It was a complete blowout. Unfortunately, the actual trade itself worked out really nicely, and we would have done quite a few in this. I mean, we've got 1, 2, 3 as well, which were all quite nice. But as soon as this trade was executed, if you zoom in right here, you will see, as soon as the trade triggered, this candlestick actually came up and topped us out. So that one was a loss, and there was no second attempt or in there or anything like that. This was a pending order position, so yeah, it's kind of took care of itself on that front. So that's unfortunate. Aussie NZD That one was really nice. So that was a nice pending order as well. We were looking at yesterday between these two margins, looking for price action to come up to the big one up at the top there, which, as it happens right now, is actually now being used as a fresh floor. We've got a break close and a retest on top of it, so we could be going for a big daily breakout on this one and the continuation of the trend. If we look at the daily time frame as well, this is actually quite a big deal here, guys, because we haven't broken free of this range since its implementation back in October. Okay, and then before that, I mean, the last time we were trading at these highs was on the 30th of July. So we haven't been here for quite some time. And judging from where these highs are, I'd probably have that there as the potential target. This now makes this area a really nice trading margin to be able to utilize. So we'll come on to that one as well this afternoon, because I think there's probably another trading opportunity in there for us somewhere before the week is done tomorrow evening. CAD Yen, which was one of our yen cross trades, was actually really good. We did have to weather a bit of a storm. It came down, it triggered and came down almost immediately after, as soon as I got the pending order in for this one after the stream was over and done with. And it almost hit TP straight away. I mean, by 3:15, it was almost done. And then we had to weather a storm, and this one lasted for a while. We came all the way back up into loss. We're protected by the breaker structure liquidity point that we'd had to utilize as our entry in the first place, followed by this area, and then we came all the way back down and finally hit our target profit this morning at around 8:30 a.m. GMT. So that one was really good. At the moment, we're bouncing off liquidity. This one looks like it's going to give us a couple of split opportunities as well. Nice breaker structure for the long, back up to the entry point for yesterday's trade, or the potential for the break close and retest the liquidity down here for a move possibly into the 109.90 area. We'll come onto that one as well and revisit it. But yeah, pretty good work from the CAD Yen there. Euro was never triggered. Obviously, we are waiting to put our pending order in after this got tested and bounced, but we never actually had that. This only traveled in one direction, and now we're trading below liquidity. So path of least resistance is now confirmed as bearish and not bullish anymore. So Eurowas bias is changed. We will have a look at that one as well. GA, that was a BCR above liquidity up here. Did have a go at it and failed. So that one was a non-goer as well. NZD CAD. This one basically ranged the entire way through entry. So it triggered pretty quickly, I would say. You know, it wasn't terrible in the evening. All the entire Asia session was pretty much blown out. Actually, no, that's a lie. Not the entire Asia session, is it? It was a fair few hours, but actually it was more the end of the US Forex session, which is where it ranged. And then in the Asia session, we got a nice little breakout, and unfortunately the breakout went into the stop loss. Once the breakout was done into the stop loss, it then went down to hit TP, and that would have been the perfect trade. So a good call, but wrong timing. It was bad timing on that one. And finally, to conclude, we had the USD Yen, and we were just looking for a little trade, break a structure point up here to come up to that major liquidity point up at around 156. And as it happens, guys, I was really, really wrong about this one. Mega wrong, because looking at this now in hindsight, of course, this would have been such a good trade for a short. Now, if we think about the nature of the markets here, we're thinking about where those major inflection points are, where the institutional firms are loading up on orders in the opposite direction to the move right. So obviously we're long, big players, all short orders, short. And then we come back up to this area in here. I wouldn't really deem this as the major inflection point, but this is a beautiful breaker structure for a short. So if we were thinking about taking a trade and we perhaps missed the entry of this one would definitely be a clear entry. And what we had was this breaker structure trade. We actually got a BCR of it as well there, and just such a nice entry all the way back down to a proposed TP at 154.15. So it was a bit of a shame. Now, I would also say that historically, I am usually waiting for the rejection from a major point before I'm able to take that kind of short. So I'm not sat here in regret that I didn't, or that, you know, we didn't see that. The fact still remains that I probably wouldn't even have taken that because of the nature of the trade itself. We hit that turning point really early. We didn't get to any major levels of liquidity or that we knew about at that point in time, because of course now we've generated it yesterday. It's just, it's just what the markets have done. But, when we're proposing a tiny little, maybe a 1 15-minute candle trade idea up at the highs here, and then off the back of it, we get like a really monumental move to the downside. I mean, this is a pretty big one, what we're looking at here. So from the lowest point to the point of entry, you're looking at around 1% down in the UJ. So that's pretty big. And it's just a bit of a shame, isn't it? Just a bit of a shame. But anyway, no losses incurred. And that's that. So out of all the trades, I think we did, after yesterday's basket, I think 9 potentials. I believe that out of all of those, 5 triggered. And I put the calculated stats up from the track record in the general chat. I can't remember exactly what we were on, but it was over 2%. It was over 2% gain yesterday, so it was a good day, a really good day, which makes up for the previous day, which was crap. So so that's where we are. Right. Natural gas, first of all, 5.35% day. Any thoughts, anyone? Look at this thing go. Winter demand spike. Now, if you recall, bearing in mind I don't actually hold on to the CFD asset here with natural gas. I've gone into a bunch of natural gas ETFs, actually, is what I'm invested in. But we were looking at down here and looking at these bottoms in the market, and this was the buy time. So if you did have the kahunas to hold on for dear life through some pretty choppy waters, you would currently be looking at a gain of around 67% return in natural gas CFDs at the moment, which is pretty bloody good, isn't it? Now, don't get all excited and giddy just yet, because this move here was down to one thing and one thing only. Actually, well, I say one thing. It actually was probably about 4 things, if I'm being really brutally honest. War times, geopolitics. We also had COVID, aftermath, backlash disasters and stuff. So, yeah, it's probably a few things in the mix, actually, for that demand. But we can very often with natural gas see these very nice big gains that come out at around our sort of winter and Christmas periods. So each and every time, November, October, November. I mean, this one, is there really any point analysing that? Not really, I suppose. But we're almost there, is what I'm saying. We're almost at that sort of, that area now. We know with 328, my initial target was 350, then onwards from there, possibly looking at 5 as a very, very high. But it's in this kind of area where I'm starting to actually consider removing risk from an investment perspective. So again, this isn't talking about the CFD, more my investments. But if you do have CFDs and you have been holding on, then you probably want to consider taking some of them out of the basket around now. I mean, to be honest, guys, look, I'll be even more brutally honest. Half the people I was talking about, or I was talking to this about, aren't even here. So through one mean or another, they're not even watching the streams anymore. So, who knows if they have or not. Probably not, knowing people, and they probably got out at one of these areas, didn't they? Because that is usually what retailers do. But we can hope. So that's where we are at the moment on natural gas. Very, very close to the ceiling. There's no need for trading opportunities at this stage. Fresh 15-minute ideas. I'm not interested in it. I'm going to wait for it to continue its rally right up into the 350s. Maybe, whatever that is, 350, 360, 370. And then from a CFD perspective, I'll possibly looking at technical shorts and shorting and hedging against the ETF holdings that I have on there, which will be all right. So UK Brent, I don't believe we actually checked off this trade idea in the recap. Trade idea is still live. Okay, this trade idea is still pending, still live. As you can clearly see, not triggered yet. It's been a real choppy, slow week for UK Brent at the moment. The same can be said about crude as well. We've had a decent run today from 6 o'clock this morning. It's not been bad. I'm not turning my nose up at that, but frankly, guys, I couldn't have traded any of this anyway. It was all just too choppy waters, and I hated the previous price. So I am going to leave, and I'm going to clarify, confirm right now. I'm going to leave the pending in the market. So that one is a goer. Tomorrow at around midday, 12 noon, I'll probably be looking at removing it if it hasn't triggered yet, because by that point in time there won't be enough time in the week remaining for it to go, and I don't want to be caught with any weekend gaps. So that's the plan for it. Looking at gold then, looking at the potential short that I was on about just a moment ago. I'm looking at this area in here being the breaker structure point for that short. We've seen evidence of this one ranging, so we know there's buy points, sell points on either side of the market here. We can clear this out. We've got a pretty good chance of the market running all the way back down to around 26.50. Nope, actually 26.45 to be exact. So this is a pending order execution. Put it in, leave it alone, let it go. And you're going to have 50% TP, and you're going to have a target, stop loss, sorry, and a target at 26.45, 0.22 for example. And that's going to yield you around a 1 to 2.5. You might want to go a little bit slacker, a little bit tighter on the stop loss. That's down to you, but that is the trade idea that I personally will be placing in the market ASAP. So in terms of the Aussie yen, folks, this one's had a couple of good goes, but after yesterday's loss and seeing the inconsistency of the lower low that's been formed here and the lower high, I'm actually going to give this one a pass. So no more trading opportunity in the Aussie yen for me, probably this week. Aussie NZD at the moment were absolutely fantastic yesterday. We've also got provided with a BCR. Possibly view this on, nope, the whole entire thing's swallowed, of course, because it's today's price. So the 15 minutes giving us some clear idea of where we could be going. I don't like the fact that the daily hasn't closed above the bar though yet. So for this one, I mean, that margin, it's going to take some consideration actually, isn't it? Because the margin is actually pretty good. In terms of price-time ratio, we won't be exposed in it for too long if it does decide to get going. But I would much rather the daily close above the bar, and then we can rock and roll. But obviously, beggars can't be choosers. What are we thinking? How should we go about this? This is a good trading opportunity, but the daily gives me cold feet. What we could do is possibly go for, I mean, this is the break close retest. We've got the structural point above. Let's give that some room. So let's lift that off the top a bit, give it some room. So we've got a nice clean breakout above this area. Let's go for a pending order at around, I mean, a good margin, isn't it? It's got to be a good margin. Yeah, 111.18. Target profit and a nice, relatively healthy stop loss. Yeah, I'm gonna go for that, guys. Nice trend continuation opportunity. We've got the 15-minute BCR. This is a daily level of liquidity, make no mistake. But in my experience, generally speaking, when we have this kind of breakout on the daily time frame, the market's going to travel to the next major daily point of liquidity on from there before it starts to contract and come back down to retest. So that's how it works. So if we're thinking about this on a daily time frame, the chances are the 15 is probably going to continue rallying up to around 111.38 first. So pending order, 0.25% as always, yielding a 1 to 1.86. Low risk profile in terms of fundamental catalysts, technical TRFs and stuff like that. It's just a really clean setup. So that's going to be locked and loaded as well. CAD against the yen. Let's have a look here. So CAD against the yen's got a nice split decision for me now. Okay, good bias long, good bias short. We've got a really nice floor, which is situated down here at around 109.35. And that is a solid trading margin. But I don't want to be taking the entire thing. I don't think we've got enough time left in the week for me to feel confident about taking that. So for me, I'm probably looking at utilizing a level like this as a TP level. Right? And so then we've got this area in here. Yeah, that's the one. That's the one. So then this becomes our trading margin. So we're not looking for a big trade here, guys, okay? We're reducing this down. So then we're going to have a nice entry at around 110, say 110.20. Yeah, let's do 110.20 entry. The target profit's going to be a 109.89, and the stop loss is going to be healthy margin above the zone at around 110.36. Yeah, because that stop loss is there. That's above that high. Doesn't really encapsulate all of those. But that is the 50% point, isn't it? Where is the 50% point? So you've got to eyeball it, don't you? I guess, yeah, 110.36. Yeah, 110.36-ish. It's got to be more than 36. It's got to be less than 37. You guys, yeah, you do that. So that's about 50. That's the 50% point between the breaker structure element and the big level of liquidity above. So that's going to yield a 1 to 2.2. This could be a pending order ready to go. Now, for the long also is going to be a much smaller trade than it was short. There's no real reason for that apart from technicals. I want to clear out the technical risk here. And the technical risk is situated quite high. You're probably looking at the median of these two margins, right? So I don't need to worry about that because we're already going to clear that out by the time we've done my breaker structure point here. So that there is going to be the level that I'm looking to get a breakout of. Now, it doesn't make any sense whatsoever for this point, but it does for this inflection point and this retest, which are both perfect. I mean, they're absolutely perfect in their form. So, and that's what I'm going to go for. That's what I'm going to work with. So this is another pending order. Nice little space above there. Entry, your target around 111.21, and the stop loss is going to be a nice margin below that zone at about 110.75. And that's going to yield you approximately a 1 to 1.9. And then essentially what we've done is created this land in the middle, which is the no man's land. Okay, so this is our NML. All right, so that's the CAD yen split bias now on that one. Euro Oz, break, close, and a retest of liquidity underneath here. I mean, these markets at the moment, it's like we've done the trench work, haven't we? The first few days. We've done all the trench work, and now we're looking at some decent setups. Thank you very much. So we've got, yeah, I'm going to classify that as a breakout. Definitely, that is a breakout at this point, even though it's a big one. We've got the next major inflection point, of course, down there. So then this becomes the trading margin. That trading margin is too large as it is situated at the moment. So we need to break it down in half. So let's draw the median in. The median's going to be situated about there. It can't just be blindly 50%. It has to be a 50% that is correlated with the price points. So all of these in here, for example. And I'll drag that one across. And now we've got a couple of different trading opportunities. So if the Euro Oz continues to trade lower, I tell you what I'm going to do, guys. Okay, I'm going to leave this in the market, this Euro Oz long. I'm going to look at, I'm going to recycle this zone here. We don't need that anymore. That's old. That's not even in the market anymore. So I'm going to recycle this breaker structure level, and I'm going to put that breaker structure level right in there because that is a really nice little point. It's been used a lot. And then what I'm going to do is I'm going to bring the target profit all the way down to around 162.076. I'm going to bring the entry down for a more aggressive entry from this breaker structure point. I'm going to decrease the stop loss. And then I'm going to put that at 167.76. So 161.76, apologies. So now we have ourselves a really nice 1 to 2 risk reward ratio trade, which has none of the time exposure to the market that we originally had. And we do have a lot more of a secure bias in that one because the market's already going to have to rally quite a way before we get there. So we could probably be looking at that one triggering. I mean, it really depends. I mean, this is heavy on the speculation front. We could be looking at this triggering tomorrow morning, which would be great at the beginning of a Friday. I would rather that. I would rather it do its thing and range or whatever overnight in the Asia session, and then it started to pick up some wind in its sails in the morning. So that's that one. And then for the short, what we're going to do, now that we've got our nice trading margins below, is we're going to be looking at breaking it below the lowest low, which is this area in here. So that's that. And then we're going to be looking at entry, nice margin below the zone, target profit down here at around 160.90, sorry. And then the stop loss, a nice margin above that there, just to account for any possible wick throughs. And you got yourselves a nice yielded 1 to 2.35. Little beauty. So again, I don't think the long is going to trigger anytime soon. If we're looking at trend continuation, i.e. this small bit of price action being the trend, then this could certainly be done by the end of today. So I'll have to wait and see, but it's a nice little looking setup, that one. So Euro Oz now gets changed into a split bias also. Right, I'm just going to have a quick look at the Euro NZD as well. We've got CAD Yen, we've got Aussie Yen. So, sorry, no, we don't have Aussie Yen anymore, do we? We have CAD Yen on both sides of the market. So, I suppose I could account for a Euro Yen in there, actually, couldn't I? Right, what have we got here? We've got some, yeah. So that's quite a significant level in there. Lots of orders in the market. Lots of orders in the market. What's the time, guys? Forgot about that, didn't I? Got ahead of myself. 2 o'clock. All right. So we've got some lows in the market there. So we'd be much more focused on the longs than we would the shorts. What's going on with this USD Yen? Yeah, see, that's at a big point as well, isn't it? So we got a Euro Yen and we got a dollar Yen. And both are at major points of liquidity below, so the bias for both of them is long. But that can't happen, not significantly so. So the DXY at the moment, let's have a look at the 4 hour. DXY at the moment is looking a bit bearish. It's struggling up at these highs. It's had one hell of a rally and now it's tired. So I would probably be more. Let's just check the Euro USD here for a moment. See where the Euro USD is trading on the daily. It's going to give us some good indication of where that Euro is in general. Yeah, right. So, okay. So we're building a picture here, guys. Okay. Look at where that price line is at the moment in this chart. So all I need to do, let's just simply, all I'm going to do is I'm going to just draw a zone where the price line is. That's all I'm going to do. Just draw a zone there. And look at that. Right. So this Euro against the dollar is traded all the way down after a really nice big bearish move, and it's now trading into a major point of liquidity. Not one of these little ones here, but a major point that's generated huge inflection in price. Actually, the last time it was down at these lows, we got a move to the upside, which hadn't been achieved since back here in 2023. So that's just the significance of the level that we're trading into right now. Now, it's a rock and a hard play, this Euro USD, okay? It definitely is, because of the fact that we've got this area, which would be considered the sort of breaker structure for a long, directly above it. So it is a rock and a hard place here. I'm not discounting that, but this is more significant than this. That's the bottom line. So I think the Euro over the next course of maybe a week or so, and not every single second, of course, but, you know, over the course of the next week or so, I believe the euro is probably going to be in bounce mode, and we're going to have a bit of bullish price coming out of the euro, which means that this Euro Yen is probably going to be the more viable choice for a long against the Japanese yen rather than the dollar, which I believe may actually strike out and come underneath. So let's go 15-minute time frame. We're going to be looking for, let's say, this area in here, which looks really nice, doesn't it? Nice rebound, retest, multiple retest. We do have that point in there, though, as well. It's a bit of a struggle, isn't it? Yeah, that is frustrating, because that is directly above where we are looking to get in. What would that do to my overall trade? I mean, then that makes this the trading margin, doesn't it? Yeah, that's annoying. That's a good one as well. I mean, I wouldn't want to discount that. That's definitely a good one. Probably increase the width a little bit on that one there. Look, yeah. Great. Well, that's just great. I believe what we should be doing is looking down here. That's what I think. So this is going to be a little bit convoluted now, but worth it if we manage to pull it off. I'm looking for a price rejection, a secondary retest of this 162 area to get its toes back in liquidity again, soak up any remaining orders that may be there, and then looking for the push out. This is going to be the breaker structure point, and then looking for the TP back up at around 163.16. So then we're looking at this being the entry, target, and of course the stop loss, and I'll be looking for a 1 to 2.55 on that one. So that's actually really nice, because then we have this area here, which means we're almost at a 1-to-1 before we reach the first technical TRF. By the time we reach the second one, we're out of the trade because that's the TP level. Now this is a case of waiting for nothing but the absolute best. Okay, there's no doubt about it. So no pending order can be placed yet. The pending order can be placed when the market reaches approximately the previous lows. That's when the pending order can be placed. So euro yen long, but no pending at this time. And I'm going to put an alarm in there to signify when that liquidity area gets hit, if it does. Okay, right, what time are we on? 3 minutes past 2. Right, I'm going to get cracking now, get going on the stocks. We've had some pretty decent trading opportunities, though. We've got quite a few. UK Brent, gold short, which I need to change the label on. Thank you very much, gold. So gold short, Aussie NZD. We've got the CAD yen on both sides of the market. We've got the Euro Oz on both sides of the market. We've got the Euro yen long. And now we're going to move on to our stocks. So NAS 100, as it stands right now, break, close, and a retest above this point of liquidity in here. It's a rock and a hard place, the NAS 100 now, because we've got this inflection point, right? So this is a nice little level of liquidity. We had an M reversal here, in fact, and the market's come up there, and now it's stuck, isn't it? It's stuck in this point. It's been pinched. Now, after a day where it's done nothing but rally, and we're currently 0.6% up, you might be thinking, well, it could be time for a bit of a sell-off in the afternoon if it's had a rally in the morning. But I think because of where we've come from, we could possibly continue going. So then we need to look at areas back here. Where could the next TP be for the NAS 100? So from my point of view, I'd probably be looking for something like that. But the margin on that is huge. You imagine that on a 1 minute chart. That's a flipping huge trade, right? So I want to go down here. Where else looks good? This area in here possibly? Maybe this one in here. So let's have a look at that one. Make things a little bit more realistic. I think that still looks too large. So what I'm going to do is I'm going to go back even further, right? This isn't giving me enough information. So I'm going to go back even further to try and find out what's going on here. So actually, this looks quite nice, doesn't it? So it looks almost as though we had somewhat of a wedge formed. We got the breakout of the wedge, the retest, and boom, we had this really nice big institutional push to the highs, didn't we? So this is obviously an area of interest. This is without a doubt. So if I draw my zone across from the top of there to capture these highs and this double retest that we had, and I drag that one across, so let's get going with it, right the way across. What happens on the chart on the way back down with price action? Okay, well, we actually get one bounce, we get a second bounce, and then we come back in. And as it stands at the moment, we haven't really had a retest, have we? We've had this push back up, but maybe this was retesting this point here. Maybe this zone just needs to be a bit wider. But I think with today's breakout volatility, we're probably going to be okay. So then the trade idea for this afternoon, and we're really narrowing things down here, guys, just to make sure that we're not going to be caught out whatsoever. This is the trade. So we're simply looking at that TP up there at around 28.62, and we're looking at a stop loss which is going to be very, very small, just below our entry point, which is going to be the breaker structure. So imagine that there is the breaker structure. You're possibly looking at about there for a stop loss. You're looking about there for an entry, and that's going to yield you a 1-to-3 risk reward ratio. Now, if you're short, there's no question. Okay, we're going to take a trade there. Same breaker structure point we utilized yesterday that yielded a positive result. So we're just going to be looking to take a trade under there. Target profit's going to be back down in here, recycling everything that we did yesterday. Stop loss is going to be at around 2765.59, and that's going to be that one there as well. So then we've got the middle in the here, the space in the middle, which is representative of our NML. So so finally we've got the US 30 Dow Jones. Now the US 30 Dow Jones, bit of a different kettle of fish here. Terrible day yesterday. The market has been in a very bad state of affairs for a while now. We've had a ranging and volatile market state structure, but it's not exactly been easy pickings, has it? So if we look at where the market's just traveled to recently, we've got this point in here. We've got the rebound, we've got the retest. It did wick through a couple of times, but no harm. And now we've come up to that area. So this is the trading margin we've got to work with. Right, so now we definitely need to go down to the 1 minute time frame to see things in detail here. And we can't do it like the NAS 100 because it's just not that clear. So we've got the breaker structure point, which is actually really clear on the 1 minute chart for a short. And that's there. So the market needs to push up into liquidity, reject, come down. We can trigger our trade and get going. The target profit for this US 30 Dow Jones is going to be, I mean, that is actually a beauty, isn't it? So let's say we're not even going to go down to the major point of liquidity, guys. We are going to be done and dusted with this before that even has a chance to take place. So I'm going to look at this being the trade for us today. And that's going to be that one. So what we're looking at here is we're looking at the push up from where we currently are. Liquidity is reached. Money is grabbed. After that, the short orders will kick in. We get the rejection. We get a 1 to 2.65 on the short. If we are going if we are going long from the breakout initially, and that's the way it wants to go. Yeah, I don't necessarily want to be catching on to this part because that's too much of a risk at the double bottom. So what I would be looking for a long, in fact, is going to be it's probably not going to be advisable. I'm iffing and umming about it because it's not really that unrealistic for an intraday trade, but it is for a breakout trade. It's pretty unrealistic today because we've got a lot of work to do around here. There's various different elements of TRS, but it's situated from pretty recent price action, and we need to wait for a 15-minute break, close, and retest of this area. I guess looking at the 15-minute time frame, I tell you guys what, waiting from this, if we push all the way down to this point of liquidity, then we can certainly look at buying back up to that high, and that will be the trade. So on a 1 minute time frame, it's a pretty big trade idea, but you'll be utilizing what have we got? I would guess then utilizing this area in here as the long point of access, and then you're looking at that area there and this as a 50% stop loss, somewhere like that. Okay, so that is pretty much what you'd be going for today for the long. So push into liquidity down here, big rejection, or push up into liquidity here and rejection. No pendings are available. Okay, you have to do this all by hand. The NAS 100, there's a little bit more. It's a little bit more forgiving on this one, of course. It just is because of the nature of the setup today. It is a lot better. So I would put my trading preference automatically on US tech stocks and not the Dow Jones today. And that's about it, guys. That's going to be a wrap from me. So if there's no questions, everybody quite clear on what needs to be done? then I suppose I'll wrap things up there and wish you all the best of luck. In fact, you don't even need luck. Who needs luck when you have a solid trading plan, right? All right, guys. Well, I'm going to wrap things up there. If you do have any questions, just pop them in the Traders Lounge. I'm going to be trading it live, as always, this afternoon, so I'll be right there with you. Take care. Have a great day, and I look forward to catching up with you soon enough. I'll see you then. Thanks, guys. Bye-bye.